So, gold. Looking at daily analysis. Let's look at what's happened in the previous day. The previous daily has closed a hammer, which indicates reversal in price, meaning price can go now bullish. Let me make sure we're looking at Wanda. Just to give you an example, we had a candlestick pattern. This is where price reversed initially, so we can definitely expect something similar to take part now. So we had an inverted hammer. Let's see if we can find the same candle historically. So something of this sort is what has happened right now, indicating price can now go up. And so we will expect price to actually keep going up after this signal here, which for people who trade based off of demand and supply zones, this is a daily area of demand. Based on that concept alone, I would be looking at it from a strong support perspective, because price tapped into the bottom of the body, which is a strong support range. Price tapped into that, took support, and then went bullish. Now, what are the other reasons? Why should we be looking at bullish bias? What are all the signs that give us that indication? Number one sign is, let's go into the weekly and let's look at possible trend lines where price is reversing. Okay. So let's consider, there it is. So a weekly trend line, an attempt to break below, has not been successful. Price eventually reversing. 2300 was a psychological level as well. Price could not close below that range and then eventually rejected, which means another sign the price is about to go up. Now weekly is closing, coming up closer to the moving average line, which means we are definitely closer to price, probably now in the scope of starting a weekly divergence, which means price, even though if it pushes up on the weekly RSI, we might see price actually continuing to struggle to keep moving up, which means we might see a break of that trend line soon. Now, will we see that break of that trend line this week? Not necessarily, but next week we may, not even next week, probably next month is where we could possibly see that happening. But currently the monthly looks strong bullish, right? Previous monthly bullish, current monthly bullish. We have one more week to go, which means this, how this candle closes, this month closes, is going to be really important. Now the current weekly doesn't have a top wick, but we also have a gap at the top, which ideally means that price, if it's going in for a swing sell, would try and make an attempt to push up, because this is a change in sentiment that has dropped price down. Change in sentiment of war in the Middle East because of Iran pulling back and not retaliating the further Israel strikes, which means that this is a sentiment shift. Now that sentiment shift was not strong enough to just break through and keep dipping down. We have furthermore fears in the market fundamentally. So we have one thing giving us confirmation that price could still be moving bullish. Actually, there we go. Yeah. So that is the weekly trend line giving us a tap right there. Let's look at daily. So if I was to adjust this on the daily, this is now going to be the daily chart. Daily giving us that indication plus a demand zone in for whoever follows that. So we have two reasons, at least from my end, is that trendline tap on the weekly, price rejecting at that point, psychological level being tapped, unable to close below. First time price has made a pullback. That's the next thing, is when we get one drop, we can't just say now price will continue to drop, right? The rainfall just does not happen just that easily. If we want to see a rainfall, we probably need a pullback for the bearish move, forming an actual trend, and then we can take further strong selling entries. Right now, it's at a very difficult zone. So if you're trying to take a sell, thinking that price is now going to go fill this wick, yes, price can still go and challenge the buy signal and go down, but that doesn't necessarily mean it's a safe entry. You take that sell, price goes down, maybe taps into this top wick here, creates a bottom wick for the daily, and then continues up with a good amount of momentum. We do have news coming up today, so there's going to be a lot of things to look at. Now let's look at 4 hours. What's the next bullish sign? So we have a 3 candlestick pattern, morning doji star being formed as well around the region of 2300, which is the psychological level, also the trend line on the weekly, which means, so let me adjust this trend line on the weekly, and then let's look at the 4 hour. Where is price? Right, so that is that, and this is 4 hours. And now if you see 4 hours, 4 hours try to make a break towards the downside, but still tapping into that trend line, staying above, and then eventually going bullish. 3 candlestick patterns forming right at the point of reversal, which was the expected area of reversal. Now, price tapping into that range, giving us 3 candlestick pattern, that's the 4th confirmation for us to get into buys. Now, what's the 5th level of confirmation? That's RSI. Price just closing around that moving average line. Moving average line is closer towards the bottom end of the 4 hour, which means price should be able to jump above. Now, if the current 4 hour, which is currently still around or taking support of the moving average line, if it ends up closing above, if the current 4 hour, that's 4 more hours to go, we close above, it's another set of confirmation that price can now take support and keep pushing up. So we have multiple reasons. We have 5 reasons to get into buys. I don't see any reason other than, if you see on the 4 hour, now this is a supply zone, price tapped into that range, you didn't see the reaction you were expecting, right? Price actually ended up closing into that range. So that's the only reason I can think of from a sell perspective. Historical rejection range, strong resistance maybe. On the daily, nothing really, right? Price just rejected on a daily rejection range. If the current daily goes back up, which it hasn't yet, and rejects again at around the same level, not even breaking above that top wick, then we can expect that price is going to go. What's the alternative scenario that can happen today? We could also end up seeing a double doji on the daily, which would be a stronger situation for price to jump up. Why do I say that? Is because of this close here. We might just end up breaking above, but not necessarily breaking the high, just a little bit lower, and then coming back down, mitigating this area here, tapping back into the trend line, and then pushing back up. But we'll look at news to decide what kind of factor we can expect. We do have GDP news and durable goods orders coming out today, so we should actually see a decent amount of momentum coming in on those newses, because this is now going to give us the overall international view, the macroeconomic view of how the economy is actually doing. Because PMI was positive, we actually would be expecting GDP to get better, but GDP has been struggling. They're expecting it to become positive from a negative 90 billion or something, which is a huge ask, but definitely likely. But is it happening? Do we see that kind of exports happening right now? Do we see that kind of trade happening? Not necessarily, other than defense. That is funding of Ukraine, providing them machinery, weapons, and so on. And same thing for Israel. No real high density trade is currently happening. So what we have to see is what kind of an impact comes in on the GDP, what kind of momentum it brings in, and the momentum that GDP ends up bringing in would ideally get carried over into next week, and then price could rally based off of that. So overall analysis gives us a fundamental view, what to expect by the end of this week, and based off what we see the week close is what we can expect for the next week. Now, as we look at the current week, we don't have a top wick and we have a gap. So we have 2 incentives to go up. But again, we cannot trade based off of the gap. We learned that during war, where price just kept moving up and created a gap there. Now we can definitely expect price to leave the gap as is for weeks, maybe months before it comes back in. But what we can also expect is a probable weekly doji close. So if the current weekly goes back up, let's find an so something like this. A hanging man without a possible top wick is still likely. We might see a small top wick, but that could be the initial selling sign for gold through by the end of this month. So we got a few more days, a couple days next week for the end of the month, and then May is generally where we will start seeing some additional movement, some additional what do we call craziness coming into the market. So let's see what happens. All right, so we have a bunch of views that we are looking at. Now going back into the trade that I've taken, as I explained why I was looking at that entry, I've been looking at that entry all week. Now initially I had a stop, a pending order at 2300 from last week, but unfortunately I got stopped out by a couple pips since price dipped a little bit further down. Now I know that people call this stop loss hunt or manipulation or whatever. There's always a reason that price makes that move, and just to identify that reason, what I could have done better is actually mark that off. We usually do that. Lately I've been maybe getting lazy, but this is generally something that I used to do or mostly have done. I missed on doing that, which what that did is daily support. What that did is messed up my stop loss and it took my entry. Well, which was fine. I was able to get into a manual trade post that, but this is something that is important. Now, if I was just trading this based off of a demand zone, I would have looked for an entry above. I would have looked for an entry mid, bottom. Again, we don't know where it was going to reverse. But based off of the daily, it's clear that this is the area of support where price should find support. Price takes that support and then eventually goes back up. So now we have taken support, tapped into an area of support where price had not tapped, and we've seen strong rejection coming in. So now a possible consolidated move and then break above that area should send price back up. And that is the idea, to enter into additional entries, break above, retest, and you can take that trade. Right. Now, secondly, another reason that you could potentially look at this is, if you're looking at this from a channel perspective, then price has broken out of that channel, which is another indication that price can now go into buys. So you could have taken that trade based off of that. The trend that H4 created has been broken. Now, daily trend has a long time to go. So we don't know where price is about to go unless price breaks through this trend line. Now, if you're looking for sells, ideally I wouldn't want to be selling unless price breaks below this daily area of support. Why? Because lower time frames have broken down and then went back up, which means you want to see a clean break of daily, closure below, and then the next daily will go back up and tap into that trend line, and that is where you could take a swing sell. That is the safest level for sells that I can look for, or I can suggest right now, because it would be high risk sell to enter into these ranges and expect this price to keep dumping. You could obviously trade based off of that 4-hour supply. If you trade based off of those things, I don't trade based off of those supply levels, supplier demand zones. I trade primarily based off of specific. Maybe gold can tap green trend line. Yeah, price can definitely tap into that green trend line, which is on the lower time frames. This one here, right? Price can definitely tap into that. You can see the price is kind of respecting it. But again, mitigating the 4-hour imbalance is kind of almost complete, so there's no further reason for price to go down. If you're saying that 1 hour needs to go, yeah, why not? Price can go back into that trend line right there, mitigate that, clear out that imbalance, and then continue up. But ideally it doesn't have to, because on the 1 hour, this is what I'm seeing right now. That is the triangle that price has created so far. Yes, it is trying to break down. As long as price closes above, it's all good. I was looking at a buying entry, but it was end of day, so since price didn't create support, it's perfectly fine. Now what I would be looking for is a break and retest above. That is going to be the best entry to get into. So let's see what happens, right? Price breaks through. The sells that I will take is below. I want to make sure I'm taking the right. So this was seems to be an old chart. Yeah, I don't need to see this. And so this momentum trend, let's see what happens there. So you can definitely take this buy here as well at the trend line tap. But again, it is high risk. Safest entries into buys is above. I'm taking the risk because I have multiple confirmations that fit into my style of trading. So I am taking those trades, but if it doesn't fit into yours, please find your confirmations before you take that trade, right? Now this is another reason I am not loving taking this trade here, is because of the big stop loss, and I can't seem to find a way to take 52 pips. So because I missed that entry because of a couple pips, my stop got hit. I ended up having a 67 pip stop loss. Well, right now it's at break even, so I'm fine. Since price jumped up, I collected some take profit there as well. So let's see what happens, right? So this is some place that you can definitely look for an entry. Next thing I want to look at is DXY. So if we look at DXY is on the weekly, looks like it's making that jump up still. It could tap down into that range. Current daily going back down. Daily looks like it's been creating a kind of a daily flag. Bullish move coming in, then consolidation in a specific channel. Now price could break back above, which is also a break of this trend line here. Price has tapped into that yesterday, unable to break below. The current one also tapping back into that range without a top wick on the DXY. So price could definitely still push up. But let's see. Now if price was to break through below here and then go all the way down and tap into this trend line, that's another reason for price to probably find support and then push up next week. Not even next week, tomorrow maybe. So if you're trying to take trades just primarily based off of what's happened in a day or two, that's probably not the easiest way to take a trade at this point. So let's see what happens, right? We let the market do its thing. So we have a doji coming in here. I'm going to take off this, and I'm going to mark off this doji here. So for those that are new to the concept of me marking off dojis, is because dojis I consider is a range of war. When price closes a doji at the bottom of a trend line, bottom of a trend or the top of a trend, for example here, that is where reversal is coming in. That means pressure changes, and so there should be a lot of pressure sitting at these doji levels, especially when price has moved up, created dojis into that range. Those levels I like to mark up. You will ideally end up seeing more dojis, more rejections into those ranges, because that level is definitely very, very strong. Right, so you can see more and more into that range. And so that is why having those dojis marked is really important. Okay, now DXY I believe is going up to mitigate this area of imbalance, and that is why it's almost close to that target. And so price can definitely go back up, but it can find rejection there. Again, doji sitting right there, and then eventually continue its fall. If price makes this fall right now, we know for sure that DXY could make another attempt to push back up at this trend line. Because honestly speaking, things have not necessarily gotten better. We might actually be seeing things getting worse in the next few weeks. Until elections, we see a lot of volatility coming in. After elections, we tend to see price stabilize and then eventually see the better side of the economy when new promises are made, new policy changes are proposed, and the policy changes take into effect in the coming year. We will see a huge amount of shift into the market and more positivity towards dollar. Alright, so that is my perspective right now from DXY. So let's see what happens, right? Current daily has definitely created that bottom wick for now. Here. So we do have a decent sized bottom wick right now. Now price should ideally go up. Now let's find another scope of something similar, right? If we are expecting price to go down and break all the way down, we also want to see something similar that has happened historically, right? So we have a hammer being formed here. So let's look at hammer positions, right? So we have a bearish doji here, price going bullish after bearish movement. Okay. Do we have the exact same candle somewhere at the bottom? Inverted hammer, price going bullish, doji coming in, so that struggle, and then eventually price breaking through. Doji at the bottom, price going bullish. Let's see. So something of this sort, bearish movement, price closing that in that hammer, going bullish, right? We might expect something similar, maybe a day or 2 days worth of bullish movement and then eventual sell off. So right here, this is the perfect example. So we have a hammer formation here, price going bullish, breaking above, that momentum kicking in. So this is the November momentum coming in around the war situation that happened and the Russia war, I believe, and then price just kept pushing up, right? So we have a perfect scope here. All right, so that is with the analysis part. Again, I do expect price to jump back down, probably into this green trend line here, and then push back up, but this is going to be a risky buy. I believe the best entries were around 2300. Now, current daily has created a bottom wick at the moment in time, so I'm looking at these buys instead, but I will keep this here for the sake of it. I don't think I need all of these anymore. And I will take, I'll actually keep this because this is where I would suggest people to close 70% of their trade, because price could jump into this range, reject off that trend line, bounce back up until it eventually clears out that gap, and then rejects into this range, going for a sell-off. So this is where I would suggest close 90% off your trade and leave 10% running in case it decides to go further up. It doesn't have to go further up, but I'm going to leave it as a runner with a trailing stop. So you can probably look for selling entries into these ranges back into 2400. So currently we are within the range of 23 and 2400. Let's see what happens. Okay. Now, over here. So on Monday, we did an analysis and we set up this buy entry on Monday. So yesterday we didn't do it. I was expecting either price is going to push up, reject out the trend line, and then go back down. Price actually broke out, gave us a entry. So I didn't take that sell, but I did take the buy, and I'm holding on to that right now. We see that price open up with another gap, and it is targeting all the way up. Now this is a good sign of a recovery on NAS as well. This means price can still push substantially up. I would suspect that price can now probably we'll see some rejections coming in at this level of doji, and then we'll see if we can get further up. I do not suspect that we will be making massive recovery, but a tap into this trend line would be the possible area of rejection. So that is how long I would be holding those buys. We are already holding some selling entries for those that are new or haven't seen those entries. We are already holding sells into these two ranges, and then a third sell here at the retest of that trend line, and I'm still holding on to that. When price took this dip, we were looking at buys, but that was an expected level of rejection. But we started the week with a massive bearish movement. Price dipped down, went back up, tapped into the trend line, rejected, and it came back down. And now we are expecting price to push up. Eventually, I do expect some rejection coming in into this weekly area of support, and then price would see another rejection towards the upside. So let's see what happens there, right? Weekly has broken below MA, so there's a long run towards the downside before a run towards the upside. And so the current weekly is probably going to be retesting and then taking a drop once again. All right, so that is the expectation with TANAS at this point. If it breaks above this trend line, well, that's the risk if you're trying to take additional selling entries. I'm gonna set that up here as well. So we can see that based off of the weekly on the weekly chart, there is a weekly candlestick closure there, which is also perfectly in line right now. Actually, it could go a little bit further up, but that's perfectly in line with the area of rejection we would be suspecting. So let's mark that off as a weekly resistance. And then let's look at 4 hours. And then 4 hours is kind of into that range, right? That is the rejection range on the 4 hour. Let me extend that and pull that out here. And we could probably see that tap later today. So for now, I'm going to move this buy all the way here and possibly look for additional selling entries into this range here. If we get it, right? Again, it's going to be high risk. Again, it's NAS, so it is always high risk. But right now, I will let it run all the way down. Right, so I'll post this into Discord as well. Swing setups. That is perfect. All right. Oil, we have been taking some trades on oil. Now we can expect this wick to be filled. However, this is one of the trend ranges, and this is what we see right now is price has tapped into that trend line, broken below, unable to close above, and it's now retesting that. So we can expect price to probably take a little bit of a dip, but it could end up taking support into this daily range here, which is also a weekly area of rejection. So this wick right there, in the body of that doji, this is the weekly rejection range, and we look at the daily, we are right within that range. So possibly this was your selling entry that tap right there. So for a short sell, again, it's high risk right now given the Middle East tensions, but you know what the hell. You could target it potentially all the way down to this trend line, but I would close 90% of my trade right there, because that is a 4-hour doji there. So right, that is the range. Four-hour doji and rejection, so that's why I narrowed it down. So price could still take support, and that's why the entry has to be below the previous wick, and then you can look for sells all the way down into this trend line right there, and then potentially going into buys. Alright, further buys, if you're looking for further buying levels on oil, I would suggest let price break above this range, create support, and then you look for buys. So, thanks. Alright. Ideally, this was the safest sell because it's a rejection range here on the 4-hour as well. And so you can see that price has just rejected the bottom of this wick, mitigating that entire imbalance, and now it could be ready to take that dip. Alrighty, that is with oil. Let me post that into Discord as well. Day trade setups, hashtag US oil. Possible sells and buys. Okay. You're seeing price take that dip all the way down. So this has failed. Let's take that off. Let's go back here. Look at gold. Let's look at daily. I would suspect price to take support at these dojis here for the day, create that bottom wick, and then go bullish is going to be my expectation. On the 4-hour, let's see what that is. It is right at that body doji, good support range on the daily, right? On the 1-hour, also mitigates the 1-hour imbalance. So, and it intersects with the trend line. So this would potentially be the best, 2305. So let's make sure we've adjusted that accordingly. Well, we should be fine. So 2305.9. I'll obviously keep it a few pips above that range for people's spreads. At the same time, my stop loss would be a little bit bigger than it. 54 pips. Yeah, this is fine. And then you can let it reel up all the way. Okay, so weekly trend line. tap, perfect tap, fine. It's 2-4. Should be fine. Safest entries for buys is going to be right above here. And just for people's sake, I've already taken some positions here, but not 50% because I am going for long. I have more confidence in myself. Daily resistance sitting there. I will remove this if I actually find a reason for that. No, not need it. Rejection range in between both of them. So I will extend it a little bit down. Close 70%. And close 90%. Alright, so you have multiple take profits that you can definitely take, at least from my perspective. If you want to adjust it, obviously, instead of taking it all the way above, you could probably take it below and take that trade, or I will take this one. For the next trade, take profit, I will actually take it down. This should be fine. Yeah, for our rejection, so I'll take that trade. So daily level, so that's fine. So that's going to be my take profit as well. That's going to be my take profit, and take profit. So yeah, you have enough take profits to take for yourself if you're taking that. But yeah, again, for those that have just tuned in, just to say that again, we have 5 confirmations we are looking at for, because of which we're looking for buys. And our bias is buys is break of channel is number 1 on the 1 hour, and on the 4 hour. 4 hour we also have Morningstar Doji giving us another sign for buys. We have weekly trend line that has not yet been broken. Tap into that range is another reason for a buy. And then daily we also have a strong rejection on that trend line, as well as the candle closing a hammer, which is an indication of reversal in momentum, which means currently price is creating a bottom wick. It could tap back into that trend line, onto that bottom wick right there, and then eventually go back up. And so that is going to be the expectation. So what I'm going to do is just going to post this line here, so we know that it is also a expected daily support. Ideally the support will be this body here, but I will consider this point of intersection as the point of interest where price could potentially tap into this range and then go up. So we will see what price does, but we'll be ready for it both ways. All right, that is another reason we are looking for buying entries onto that range. Next is if you're looking at it from a demand and supply range, this daily here is giving you the reason for a demand, and then price is again rejecting into that range, so another reason for you to look at buys. Now, from a selling perspective, other than this massive wick here, what other reasons do we have for sells? We have daily moving below the RSI, on the RSI, moving below the moving average line, which is the indication right now that price is going bearish. Perfectly fine. We have strong divergence sitting there, but the divergence will be completed once price retests that moving average line, which it currently has not. So a price tap back into this range is what will set price to go down, which is my assumption is this is where price could, this intersection point is now going to be my point of interest for a possible sell entry if at all price wants to swing down. Now, another thing on the weekly is we don't have a top wick. We could close a doji, a hanging man for the weekly, giving us signs that price is now ready to go into a bearish mode. And then the weekly is also tapping into that trend line, which is where into the moving average line on the RSI, which was another reason where price reversed, giving us a good tap onto that trend line and then pushing up. Now what we wait is for the weekly to close. Next weekly is going to also be this end of the month, so you would want to avoid taking trades on the Monday and Tuesday. This is going to be end of the month because the monthly still is strong bullish. So let's see what happens there. The strong rejection will not stay. Probably we'll see something of this sort, halfway full, and then the next week we might see that push up, rejection once again below that high, and then maybe 2400 would be that range, and then price dips down, creates maybe a doji or something, giving us an eventual sign of a sell. But another thing that I want to highlight is this thing here. We have that. So price does not generally on the RSI go above this range, which it has not yet tapped into. This is the highest peak, which means another range towards the highs is probably likely because price broke above the moving average line on the weekly RSI and has not retested it. This is the first time it tested it. We might see that rest coming in onto that and then eventual push up, which is also going to be the start of a possible divergence on the weekly, which will be the indication for sells maybe in the end of the month, next month, or mid-month next month. So you might end up seeing long-term sells coming in soon, but maybe not yet. So let's just wait and see what happens. All right, so yeah, that's pretty much it. I'm gonna make sure that I save this, and I'm gonna post this recording in on YouTube. So if anybody wants to watch that, you can definitely take a look at it. All right, so that is that. I am going to post it